The crypto market's off from the highs we saw yesterday, but don't worry, juicy CPI data came in. What about the Fed and cutting rates? Well, it ain't going to happen anytime soon. Back half of this year looks juicy. We're going to talk stablecoin regs, SEC meetings, price action, along with...
I say lots of naughty things, so here's your warning.
And what about this? No rate cuts for a few months? Oh yes, the data shifted and not in a good way. Red up on the screen, green in my background. But before we get into crypto news, your comments come first because you, the viewer, matter most. Evan Rogers says, yo, F Papa John's, you're the real deal. I appreciate that. Love to Ride one says, hey, here's some support. And thank you. Thank you for the support. I greatly appreciate it. Oh, Nerdstrom says, hi from Communist Canada. Love the humor. Let's get into what happened here. We're off from our highs of yesterday, but we're still higher than we were over the last several weeks. Bitcoin sitting at 103,778, ETH is 2549, XRP at 254, while the rest of the market is in the red. Now, granted, we're all still higher than where we were looking at. XLM at 30 cents, better than what it was. ADA at 80 cents, better than what it was as well. But what's happened? It's this. CPI data came in at 2.3. That's 3 months in a row of CPI data coming down. Here's the deal, though. It's still not enough. And you're like, bro, what are you talking about? It's not enough. Check this out. This is the Fed's expectations. And oh, yeah, we talked about it hardcore in the live stream. But look at this, all right? I'm going to share this with you. We're going to go into a little snipping tool here. 1 week ago, okay? 1 week ago, we had what? A 21% chance that the Fed was going to pause in the July meeting. Yeah, I'm talking all the way about July. Why? Because we're talking about the movement in a minute, everyone. Now look what happened. A 61% chance that we're going to pause. So in 1 week, we had a 40% swing to the bearish side, to the hawkish side in terms of cutting rates. Why? Because we got a temporary deal with the United States and China. And some of you are like, but bro, wait a minute, we got a temporary deal. Doesn't that mean we should be cutting rates? No, because when we watched Jerome Powell together, when we watched the FOMC meeting together, what did Jerome say? We can leave rates higher for longer. We feel comfortable doing so because of what? Because if we don't know what the final result is from the tariff trade talks, we're not going to make a decision. So the 90-day deal that we got was basically them saying, yo, we're going to cool our jets. We're going to give the market some time. We're going to let things cool off. And we're going to meet again in 90 days. That pushes us to the beginning part of August, everyone. So now, no rate cuts in June. Most likely no rate cuts in July, and we might only get 1 rate cut this year instead of 2. If we get 2, those 2 rate cuts will be squeezed in between the September, October, and December meeting. And think about this. What else would happen around that time? Stablecoin regs. So we could have a really juicy back half of this year. But what do we need to get done first? We need to know what's going to happen between the United States and China. Now, gold market, what's happening here? Profit taking. Gold is getting high up there in price. Players take profit, knock it down. They buy it up again, take profit, and knock it down. What are you seeing in the crypto market, right? Prices go up, players take profit, knock it on down. Players buy the dips, take profit, knock it on down. We've seen that time and time again. So the crypto market and the gold market are both playing what? Pumps and dumps. Why? Because everything is temporary right now. Executive orders for crypto are temporary. The next president could come in, create a new executive order, and what? Wipe out all the executive orders we got right now. That's why regs are so important, because you need permanent regulations. Otherwise, these are just temporary executive orders. So the big deadlines we're looking for are the beginning of August, United States-China trade deal. Let's keep learning. What's happening? Volume bonkersville. We're doing really good with that. 158 billion in volume right now. Altcoin season is holding on to it. This is looking good. We're at 33 out of 100 with altcoin season. Look at the market cap for altcoins. Soared big time. We went from 1 trillion in market cap to altcoin to 1.3 trillion. We gained $300 billion in 3 days, everyone, with altcoins. That is freaking awesome. We went from a low of 23 all the way up to 43 for altcoin season index. So the alts are definitely roaring, and you could see a lot more alts in the green ahead of BTC on the screen. This is good. ETH, they're playing that as pumps and dumps as well. ETH touches 4,000, players sell it off to the 2s. ETH touches 4,000 again, players sell it off to the 1,500 mark. So, greater crypto market, they're playing pumps and dumps. Gold market, they're playing pumps and dumps. Why? Because nothing is solid. Nothing is concrete. We don't have regs, we have executive orders. Those are temporary. We don't have trade deals, do we? No, we've got one with the United States and the UK. But with the United States and China, what do we got? We got a 90-day break, a 90-day chill-out period. So again, what can happen in that time? Pumps and dumps in the market. What else do we got? We've got SEC roundtable discussions all the way through to June 9th. So we're probably not going to get regs in the month of May. We're going to be starting from scratch. I already brought that up. So this leaves what? This leaves volatility open. When volatility is open, you can have wild swings in the market. What happens with wild swings in the market? Players make plays on those swings. XRP price, very healthy still. 254. I like that. Volume, 9 billion right now in volume. The Japanese yen pairing is starting to roar. Almost 730 million in volume with the Japanese yen pairing. Let's go to those candlesticks. I want to show you the 15-minute. Look at this. We pushed back from the highs of 265. We're okay with that. But we've gotten support right here from the low candlestick of 242. We're above 250 on this move. My alerts are at 250 on the low, 260 on the high. Yeah, we're still looking good, everyone. Now, this volatility, though, can go wonky. Could go wonky to the bad side if we get some nasty trade rumors with the United States and China. Could go to the good side if Scott Bessent gives us something good. If all of a sudden, out of the Senate or out of the House, we get something good with regs, with stable coins, well, then what? We could get a market that goes greener. So yes, there's a lot of things in motion right now. But the big things to pay attention to are the Fed rolling back the odds on us getting a rate cut. June, no chance in hell. So if you see a channel out there that says, oh, emergency Fed meeting, oh, they're going to be cutting rates, they're fucking retarded. Call them out on it. 91% chance that they're going to be pausing in the June meeting. The July meeting, which a week ago we had a 61% chance that they were going to cut rates, is now looking at a 61% chance that they're going to pause. So our first chance of actually getting a rate cut is going to come from the September meeting, when we got about a 70% chance of that happening. We need some regs to happen. We're starting from scratch. CPI data looks better. That's good. Energy has come down. Food is still high. That's not good. That bugs us at home. We've got some regaroni talk we got to deal with. We got CPI data. We got regs that we got to deal with. But right now, the overall market is green. The alts are roaring. The alts have gained 300 billion in value over the last 3 days, and that's good. Volume, hot through the weekend, got hotter on Monday. They're still hot today. This is good news. Overall, we're seeing what? We're seeing more institutional money flowing in. Happy to report on that. This is good news, as we have what? Only temporary relief from the governments and the bigs out there. So, why are we red? Because everything we've gotten has been temporary. And players, whether it's gold, whether it's crypto, whether it's stocks, have been playing the pumps and dumps, dips and tips, because no news out there has been permanent. So we got good CPI data, but on the other hand, we've got the odds of the Fed cutting rates going down, 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 which is not good. But we did get a 90-day temporary relief between the United States and China, which gave us the initial pumperoni. But what happened? Since it was temporary, we had what? The pumperoni, which turned into the profiteroni, which turned into the dumperoni. But that's normal, though. We've been following that with the gold market. We've been following it with the stock market. And that's been happening with the crypto market this whole time. Why? Because executive orders are temporary-eroni. Because we saw, as soon as Trump went into office, what did he do? He signed executive orders to undo a lot of stuff that Biden did. If the next president is very different than Trump, that person then could sign executive orders in to undo what Trump did. You see my point? The trade deal, it's a 90-day kind of pause on stuff. Temporary. So all of this temporary stuff right now is at least just giving us a break. But that break is allowing for what? Volatility, to play the dips and to play the tips. So does that mean that XRP could go sub $2 during this time frame? Hell yeah, it does, because we've seen all sorts of crazy stuff happen. But it also means that if something juicy, like an announcement from the Dems and the Republicans working together on a stablecoin bill, could bring the markets back up. It also means that if we get a permanent good deal between the United States and China, the markets could definitely roar. We've seen ETH above 4,000. We've seen XRP above $3. We've seen XLM above 40 cents. So we know the prices can get there. And that can easily happen with some permanent news. Now, Jerome Powell's not going to go permanent on the rate cuts until he knows what's happening with the trade deal. And that puts us all the way through to August. You ain't getting any stablecoin regs in May. And it's probably not looking too good for June because we got to start from scratch. So now we're looking at July, August, September for the juiciest of the juiciest. But that allows for what, everyone? It allows for stacking opportunity, it allows for swing trade, and it allows for juicy volume and momentum plays out there for the riskiest of plays. That keeps crypto spicy, hot, naughty, and relevant, and that's what we want, because Boringsville sucks ass. When things are boring, even the institutional players don't want to get in. But the institutional players are staying in, which is awesome. The money has been flowing in. That's good. Institutions don't throw money into stuff time and time again that's losing them money. No, they stay into things that are gaining them money. So, CPI data down for its third report in a row. Great news. Odds of us getting a rate cut just went to shit. Probably not great news. But right now, all eyes are on trade. And if somehow magically we could get a summer stablecoin deal, well then you know what? It's not just green in the background and green in my notebook. It would be green up on the screen. So choo-choo what? Choo-choo bitches, girlfriend.